Going here, there. Mic ready. Share the screen here. Get the YouTube here. And last but not least, there we go. Perfect. Good morning, everybody. Good morning, good morning, good morning, and happy hump day. Happy Wednesday. Hope everybody's doing well. I hope you guys could see my screen okay. We got Omar, Ivano, Glenn, Manuel, Cam, good morning, Devin, Dave, Dennis, Robert, Armolfo, Dave, Karen, Vernon, Heather, Wade, Ray. Good morning, good morning, good morning, Kevin, Bob, Rosalind, Darren. Darren, thank you again for the nice gift. I'm gonna when it's freezing today here. It's we had frost this morning. When it gets a little warmer, I'm gonna wear it. But thank you. I appreciate you thinking of me. Very, very kind of you. Very, very kind of you. Darren, Art, Kirk, David, and again, if I'm missing somebody, I apologize. We're getting a lot of people in here. Eagle Beagle, good morning. Jody, Charlie, Thomas, Sarah, Robert, Sasha, the Sassy Trainer, Terrence, Tony, Henry, Julian, Blair. We got Dave, Kevin, CJ, Stacy, Heather. Yeah, praying for people in Los Angeles too. It's horrible what's going on over there. But these fires happen all the time. Hey, Ali, good morning to you. Eduardo, Dave, Richard, good morning. Yeah, giving me a heartburn too. Justin, Dom, JC, Anikumar, good morning. Hopefully I pronounced your name correctly. Colleen, Bancroft, Tim, John, Ricky, good morning, and good morning, everybody. Hope everybody is doing well and not freezing their tuchus off, because I'm definitely freezing my butt off. It's cold here. Even with the heater on, it's cold. And yesterday, boy, oh boy, I had snow. I mean, it was, my skin's not used to this. I'm protesting the weather here, all right? Protesting the weather. All right. Let's get into it, right? Good morning, Richard. Good morning, everybody. Good morning, Samson, Walter. Good morning. Just want to make sure everybody got my alert. We're good to go. And let's start the day. First things first. Let's start off with the news. Good morning, Ben, Debbie, JB, Nathan. 23 degrees in Tennessee. Ay vey. Ooh, 20 degrees. Yeah, praying for Los Angeles. Terrible, terrible what's going on there. I once was driving to the airport on the 405 freeway, and there was literally a fire maybe 40, maybe 50 feet away from me on one of the mountains near Bel Air, and it was awful. It was like being in Universal Studios, and because it was bumper to bumper, and the fire was just coming here, and the trucks, it was surreal. It was surreal. It was, I'll tell you, LA is one of the most beautiful places in the world, but they've got a lot of trouble over there. They have a lot of trouble. Yeah, I'm going to talk a little bit about quantum computers as well. Kids will probably be out of school Friday. Yeah, yeah. Ooh, 40 here in St. Pete. Not bad. Not bad. Not bad. All right. So first things first. Let's talk about things that are happening in the world right now. The correlation between bonds. Why I don't have bonds here, I don't know. Probably one of the most important things to talk about. But the correlation between bonds, the long bond, which is why I keep obsessively showing it to you. Here, let me show it to you again. The correlation between the bond market and stock market is now, there's always a correlation between stocks and bonds. Usually it's about 60, 65%. It's right now at 73%. It went from 72% to now 73, signifying heightened interconnectedness that could drive simultaneous volatility to decline, market decline, not volatility to decline, for a market to decline, which would increase volatility. So, yeah, yeah, not good for Los Angeles. The 30-year mortgage now reaches 6.9%. Last time we've seen this was between 1978 and 1981, fueled by concerns about housing affordability. Government spending rose 99% in 10 years, outpacing tax revenue growth of 60%, raising alarm over fiscal sustainability. Yeah, someone's got to the government is out of control. I mean, totally out of control. Let's see. S&P erases its year-to-date gains with a massive 625 billion market cap wipeout. Not really good. Interest rates surge as the 10-year note yield approaches 4.7%. Mortgage rates climb past 8%. Very bad. Increased geopolitical tension due to Syria. And Tesla faces a probe into 2.6 million vehicles over remote features potentially impacting the stock and, more importantly, the broader EV market. And again, this is an AI-generated top stories that I like to review first thing in the morning because it's always good to know what's going on in the world. Also, let me give you guys some links. Yeah, well, depends on perspective, right? Right, George? Good morning, Peter. Happy New Year's to you. Yeah, home sales, not a good time for home sales at all. Not a good time for home sales. Cam, do me a favor. Repost me that link. You and I chat. Oh, here, I found it. Here's Customer Service Live from 10 to 1 p.m. Cam and Gustavo show. Here is the link for the class that I had yesterday on the VWAP. I highly recommend you guys check it out. It'll be pretty cool. And I'll be talking about a topic today. Now, the last 2 days, I've been giving you guys some real red meat in the VIP room. That will continue today. I'm going to continue this. And I'm going to be talking about how to use volatility to decide if we should be buying debit spreads or selling credit spreads. Okay? How to use volatility, how to use implied volatility to determine if you should be targeting credit spreads or debit spreads. Okay? Very, very important. Yeah, yesterday we had a really good class. We had a good VWAP class. We had a good positioning class. We've had some good sessions. Today I'm going to continue that with how to use VIX to decide if we should be buying debit spreads or selling credit spreads. And again, here's the link for that. It's happening at noon, and I highly, highly recommend you guys attend. Good morning, Dr. Serena. Thank you, Bob. Thank you, Dr. Serena. Thank you for being my actuaries and actually encouraging people to come in here. I appreciate it. I really do. All right, so that's the things that are going on in the world. As far as the market, again, I hate to say I told you so. I really, really do. Thank you, Dr. Serena. I really do appreciate everybody being here tremendously. And we're going to keep the class up. I figure it's the first week of the year officially. So this entire week, I'm going to be giving you guys premium content in the VIP room. Why? Why not? I love all of you. I love doing it. Why not? I love doing it. And yes, the reason that Bob and Dr. Serena are asking you guys about giving me participation is because they're enjoying this and they want more people to come here, and I really appreciate it. Now, tomorrow, I will not be here today because the market's going to be closed. I will be doing a webinar at 10 a.m., but I will not be here in the morning or in the VIP room. I don't see a reason to analyze the markets when markets are closed. The reason I'm here is to tell you exactly what we should be doing in the next hour or a couple of hours or the next day or two. But there's no reason for me to be here when the market's closed. So I will be here at 10 a.m. for a webinar, and we will post links on the website, but I will not be here at 8 a.m. or at noon tomorrow, just FYI. Me, 10, I love how the S&P went exactly where I thought it would. Nice, Penny. Very, very nice. Yes, no, we will not have class on Thursday. The link is in my Ellen. Just go to my last 2 days VIP room in the live tab in the YouTube channel. Go to YouTube channel, yesterday's VIP room, and the VIP. Here, let me show you how to find it. They will post it in the members area eventually, when they get to it. But here, you would go to YouTube, right? I'll just show you very, very quickly. You go to YouTube, you go to Roger Scott, right? Real simple. You click my mug right here or this link right there, and you go to live. You see this tab right here, the live tab? I'll post it for you guys. Right here, live, live. And when you go there, so this is the VIP room from yesterday, and this is the VIP room from the day before. So it's VIP room morning show, VIP room morning show, VIP room morning show. Whenever you see Matt angry face, that's the VIP room. Whenever you see my smiley face, I'm just kidding around. That's the morning show. But seriously, see VIP room, VIP. Every other one is VIP room. So they every time we go live here, it collects it in the live tab. Okay. I'm just giving you guys some information. And again, here's the link for that right here. Can you imagine the guy lived till 100? Thank you, Rebecca. Amazing. He was from what I understand, he was a pretty cool guy. His sister was very strange, but he was a pretty normal guy from what I understand. All right, so the Nasdaq is down about 20. It's look like it's coming up right now. We have international trades and goods and no, we don't. We have a petroleum status report. We have ADP, which will be coming out in about 4 minutes, and the ADP report will reflect on Friday's employment report. Now, this report has been very wrong. Like it's been, it's not accurate all the time. Matter of fact, I would say it's accurate about 60% of the time. So it doesn't really reflect that much, but it does. It can have a major impact if the market is waiting for it. So we're all very curious to see what it has to say. We also have FOMC minutes. I don't think it's going to have a major impact, but we will see something. We will see an impact on the bond market. Bottom line, please, please, please keep your eye on the bond market today. Very, very important. And starting with the analysis, we can actually start with the bond market. I've been showing you this. I've been showing you how we broke out of this compression. This is very, very bad. This puts direct pressure on U.S. stocks. Okay. I don't, Kevin. That's interesting. I don't remember them. No, no. I remember his sister. I remember his sister because there was a big article about his sister becoming friends with the guy who used to own Hustler magazine, Larry Flynn. And she was trying to convert him into being religious, something like that. I read something about it, so I thought it was really interesting that his sister was really interesting. Anyways, I just, very interesting family. I don't know why I'm even talking about all. Well, I know why I'm talking about it because Jimmy Carter died. The main area of the members portal. Oh, it's also in the main area of the members portal. Thank you, Rebecca. I appreciate it. Both videos, Rebecca. Do you know if both videos are there, or if just one video is there? Let me know. It's a special webinar tomorrow, Rebecca. It's not a replay. It's a special webinar. It'll be a good one, I promise you. All right. All right. So this is very, very bad for the stock market, not just because it's correlated to the stock market, because it's not always the correlation, but because this puts direct pressure on stocks, especially housing stocks, real estate stocks, those kind of stocks that are specifically very intrinsically linked to interest rates. And the truth of the matter is the majority of stocks are interest rate sensitive. Now, the bond market's going down. So what's happening with the US dollar? Well, you probably already guessed what's happening with the US dollar. Back up, baby. Back up. There's no way the US dollar going higher is going to create, so US dollar is going higher and it's creating higher yield, or yield is creating stronger dollar, which, as you know, is not really great for gold. Gold is just kind of continuing its move here. I think a lot of folks are starting to put money into defensive assets such as gold, which is keeping it up. But I'm going to tell you right now, unless the US dollar starts breaking down, and when I say breaking down, you see this level right here, 107.12, until it starts breaking this level, nothing good's going to happen with gold. And crude oil, the only reason crude oil is going up is because of what's happening with Syria right now in the Middle East. And again, we have a resistance area right here near a little above about 60, 76, $77 a barrel, right around there. Hey, Angie, right next to your NASCAR Coke bottle, people pay for it. Yeah. Anyway, so, and this is inflationary, and this is inflationary. And guess what? This is really inflationary because US dollar going up, obviously inflation. I mean, we all know that. China. China's now below the 100-day moving average. We're now below the moving average. And do you think bonds will turn around anytime soon? Yes, I do, Claire. I think they will turn around second time of the year. I think we're going to see more. I think we're going to consolidate and start turning because there's no reason for them right now. Economy, inflation is still sticky, and the Fed, what they're doing isn't helping. So how is them not going to? Okay, let me explain. They've been lowering rates, right? And the bond market's been going higher. This is the long bond. And remember, it's inverse. So yield goes higher when the bonds break down, right? And bonds are definitely breaking down. So if the Fed started lowering rates, logically, the Fed started lowering rates right here. Remember, right there, right here. And since they started lowering rates, rates have gone straight up. So now, what will happen if they stop lowering rates? How would this? How would it help? They started lowering rates, so this would go up, but this went down instead. So now they're not. They're going to stop lowering rates. So if they stop lowering rates, this should just increase. So the only thing that can happen to help control this is for them to start uh, uh, maybe raising rates a little bit or talking about possible fear of a rate hike, which would, and they're not going to do that because they know they're going to look like idiots if they do that because they're going to look like they're completely incompetent, which is exactly what they are. Remember, I was saying, please don't lower rates here. Wait till after the election because this would have kept going up and we would have probably been around here right now and the stock market would have been in a much better position. But again, nobody listens to me. Whew, Kevin, that's up there. That's up there. Well, money's becoming expensive again. All right, let's break everything down and let's talk about the economy. Investors awaited the Federal Reserve December meeting. That's coming today. What about minutes? Do we have the minutes already? Let's see what the minutes say. I mean, ADP, sorry, ADP. Interesting. Look at payroll. Very low hiring. Look, they were expecting 125 to 160. The consensus was 134, and they got 122. Not really that great. Not really that great at all. Let's see here. This is delayed. One second. Let me quickly take a look at something here. One second. I just want to turn on TC 2000 to see the impact. It'll just take a second. Come on, TC. Where are you? There you are. I love my TC 2000. Oh, we'll talk about Palantir in a second. Don't you worry. Don't you worry, Heather. We're going to talk about Palantir. We just got the biggest buy signal in Palantir of history in the history of trading. I'll show you why. This is the bond market. So it tried to rally. So all right, it's this report is not being interpreted as negative. Okay, good. At least it didn't bank down. So it looks like we bottomed out around 7:45 in the morning, and now it's starting to come back up. I'll leave it up here just to see what happens next. All right, we'll just leave it up here. They have blown it already. It's very hard to fix it right now. Oh, Heather, wait till you hear what I have to say about Palantir. Oh, I have a lot to say about Palantir today. I think it's like the best time in history to buy Palantir, and I'll tell you why. Wall Street's main stock index closed lower. Palantir Technology slumped 7% and was the top percentage loser on the S&P after Kathy Woods sold it. What is the best counter indicator in all of trading world? Who is consistently wrong on everything she does? Often, like every other day. Who told Matt after seeing this morning? Time to aggressively buy Palantir after showing this. Who, are you guys cracking up? Listen, I'm going to tell you something. I wouldn't be buying Palantir right now, but I'm going to tell you something. Kathy Woods is the worst trader I've ever seen in my entire life. And when I say she's the worst trader I've seen in my entire life, I really do mean that. She's the worst trader I've ever seen in my entire life. So the fact that she sells Tesla at the worst time every time, right? Do you guys see why I'm getting excited about Palantir? Come on, baby, time to buy. So this is the best buy signal I've got on Palantir all year. Now, obviously, I would wait for Palantir to come back up, but you guys see why I'm so happy about Palantir? When Kathy Wood sells something, oh boy, it's time to buy. I don't know, Dave. I have no idea. I have no idea. But this is a buy signal for me. Tesla slid over 4% after Bank of America downgraded it. And they had some bad fundamental news for deliveries. Moderna, more talk of COVID. Moderna rallied. Job openings unexpectedly rose to a 6-month high. The market didn't really like that yesterday. November trade deficit widened. Not so good for America. This is not good news for America. Oh yeah, she's worse than Jim Craner. If you ask me during the VIP room, I'll explain to you exactly why she gets so much attention. There's a reason why she gets a lot of attention. And I can actually explain it and put it into words where most people can't. So if you ask me, Rich, if you ask me during VIP room, I'll actually explain it in great detail. But there's a real reason why people think she's the hero of Wall Street. And that's another reason why she should be fired and her trading license should be taken away. People don't understand the real truth behind her, but I'll show you the numbers behind it. I'm not just going to give you my opinions. I'll actually show it to you. Okay? That's the difference between me and others. When others give you their opinions, I actually show you why I think what I think. Because if you don't understand why I believe what I believe, you will never trust me. All right. Let's see what the Fed had to say about interest rates. I love reading this nonsense that they say. Barkin said on Tuesday the central bank is highly committed. Okay, great. Then why aren't you raising rates? And should price pressure persist? Yes, it's persisting, buddy. It's persisting. The Fed will need to adopt a tougher stance. Yes, you needed to adopt a tougher stance 3 months ago. You're a little too late for the party. Atlanta President Bostic stated that in a podcast, everybody has a podcast now. Everybody's Howard Stern now. Recorded on December 9th and released Tuesday that policymakers should proceed carefully. Really? Well, if you should proceed carefully, then why haven't you been proceeding carefully for the last 10 weeks? What possessed you to lower rates again? So you like to stepping into poop 3 times, don't you? Yeah? All right. They're just morons. I have no respect for these people. She hasn't done anything for you, and she's not going to do anything for you. And people are going to sue the living hell out of her in the next couple of years. You'll see, and I'll explain why. There's a fundamental reason why she's doing really poorly, and I'll explain it to you. I tracked her progress. And by the way, I was saying all of this 7 years ago when Jeff Zananeri and I were talking live. I was saying exactly the same thing about her. Nothing has changed. People like Ken and people who've been here with me for years, they know exactly what I'm talking about. There's now a 95% chance that the Fed is not going to take any action. Stock market and federal government will be closed. Now, I thought it was a yearly thing. It's just going to be a one-time thing, which is fair, very, very fair. I mean, he was the president. I just didn't understand why they had to make a special holiday for him, but they're not making a holiday. They're just closing out of respect for him. That makes perfect sense. That's a cool thing to do. We're watching Federal Reserve's minutes. That's coming out at 2 p.m. today. Let's see how the market's doing. Yeah, the bond market's liking this report. That's great. That's really, really good. Let's see if we can. We're above the VWAP. Let's see if we can hit the moving average here. All right. We have ADP employment report. We already know the number came in light, and the bond market likes that number. We have crude oil inventories today. I wouldn't be paying too much attention to this because the Middle East is what's driving price right now. Where you get this morning information, we are seeing now it is No, Dave, look, here's how special it is. First page of bar charts right here. That's the information I'm sharing with you right here. Headline on bar charts right here. That's what I'm sharing with you. It's a PDF of the head story on bar charts. Yeah, yeah. I thought they were making a holiday out of it. It's very normal. Yeah, but I want to explain to you why there's a specific reason, Richard, why folks thought she was the next coming of Christ. There's a very, very specific reason for it. And I'm going to show you that reason, and I'm going to show you I'm going to track. If you ask me during the VIP room, I will spend 5 minutes showing you and explaining to you exactly why people love her and the big, big problem with her. And I'll explain it from a mathematical perspective. Bar chart premium in the morning before Roger showed. I don't even think you need premium, guys, to get this story. You don't need premium to get this. Adam, it's free. You don't need bar chart premium to get the headline. You don't even have to be logged in to get it. So you don't have to pay. I don't think you have to pay for it. Europe is not giving us any tailwind, hovering near the highest level in 3 months, which is good. Investors continue to digest economic data. Financial and healthcare stocks led the gains. That's good. Auto stocks lost grounds. Yes, Tesla is very much correlated with other auto stocks. If you don't believe me, look at their correlation matrix. You will see. They're not as correlated with EV stocks as much as you guys think they are. They're correlated with auto stocks. China closed just above the flat line. Amid going subdued sentiment, appliance stocks led the gains on Wednesday after China expanded the range of its consumer goods trade-in program. They're doing anything they can, aiming to rejuvenate demand in sluggish household sector. God bless them. They're doing whatever they can. It's not helping, though. Japan closed lower, tracking overnight losses on Wall Street. Worries persist about the Fed being incompetent. I'm paraphrasing this, obviously. Tech stocks led the decline on Wednesday, and chip and auto stocks. Now this is kind of strange. Tech stocks did bet poorly, but chip and auto stocks outperformed. Chip stocks are tech stocks, but not broad. Yeah, it's very bad what's happening in Calmain Foods. We do track the stock, so not right now, but we do track the stock. It got upgraded. AMD slid 3%. Chip stocks are not getting upgraded. And I'll talk about this in a minute, but I wanted to show you yesterday. I post this on the Telegram channel. Yesterday, we had a engulfing candle. And by the way, remember that level I told you about back? I erased all I erased all the lines, but remember I told you about this level, 265? Look at where we went yesterday. Look at the high yesterday, 263.58. And what happened after we hit this level? We had an engulfing candle say, no, 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 no. Big, big breakdown. Got close to 265. Remember, when did I tell you about that 265 level? Over here, beginning of summer. What are we trying to do right now? Break through that level. What happened when we tried? Pow. What happened when we tried? Pow. What happened when we tried? Pow. Nothing good is going to happen till we break above 265 and start trading there with volume. I said it 5 months ago, and I'm saying it again. Can we forget about the two? No, RJ. I'm trying to remind you more than ever, painfully, about the 265 level. Why would you forget about the 265 level? I'm just explaining to you how we had an engulfing candle getting close to that level, and the market did this, slapped it in the face. So the market, can I have the 265 level market? Can I go up to the 265 level? Pow! Sure, go ahead. Forget about that 265 level. No, my point is you should remember that 265 level better than anything, than you remember your last name. That's what you should be doing right now. You should be embracing and remembering that level better than your last name at this point. Because this we had an engulfing candle yesterday. Learn to read what price action is telling you. We went here to 262.26. Pow! Engulfing candle. We went up here to 261.15. Pow! Engulfing. Look at this. Pow. We went here. Market, can I go to 265? 263.29. Pow! Engulfing candle. And you're asking me if you should be forgetting 265? You should be putting it on your forehead. You should be tattooing it to your forehead. Me either, Ralph. I agree with you. I don't feel comfortable, warm and fuzzy about them either. But sentiment. Let's see how many we got. 509 people. Let's get it. How about a thumbs up? Yeah. All right. So no, you shouldn't be forgetting the 265 level. This is the time you should be remembering that 265 level and saying, thank God Roger said not to do anything till 265 because I would have been screwed out of chip stocks 3 times already. Right. How can we forget it? Right. Exactly, RJ. No, you don't want to forget it. You want to embrace it. Should we have made a 265 t-shirt back? Yes, of course, obviously. Chinese New Year soon. Historically, the shadow lending market in China uses settlement. I don't know. We'll see. We'll see how that goes. All right. Let's see how the bond market's reacting. Went up a little bit, not too much. Let's see. Jobless claims. I bet you the number's really good. As it's been historic. Yep. No issues there. And we never had any issues. Remember the Fed? Job is, we're worrying about the job market. No, you're not. There's nothing wrong with the job market. All right, let's continue our story. So AMD is down today. Do you think that's going to help semiconductors? No. Remember yesterday what I told you? Yesterday. Yesterday in the pit at 10:58 a.m., adding Pan W to short watch list. Pan W, they got downgraded today. That was yesterday, my alert. I like it technically, not because I knew it was going to get downgraded. I had no idea, but I like technically. So not good. This is not good for tech. Now, I'm going to talk about something right now, and I know a lot of people are going to be saying, yeah, blah, 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 blah. But do you see this right here? Do you remember me telling you guys that AI, and when I'm talking about AI, I don't mean Chat GDP nonsense that's programmed by a people. I'm talking about real AI. Remember I said Terminator, people assisting you, gardeners doing gardening, real AI. I said AI is not going to be around for the next 15 to 20 years, maybe more. Do you guys remember me telling you that? And people were like, no, he has no idea what he's talking about. He has no idea. Well, guess what? The president of NVIDIA told you that yesterday. That's with quantum computers. You're not going to have those type of things that you're thinking about for the next 15 to 30 years. Now, the fact that you don't trust me telling you that is fine, but you should probably trust the president of NVIDIA, the CEO of NVIDIA telling you that. And by the way, this is common sense. So for anybody who thought we were going to have AI speaking French to you next week and helping you assemble your house and do that, 15 to 30 years. So this AI business that you're talking about, it's about as limited can be. We're at the beginning floors. The true AI is not going to be here for at least another 15 to 30 years. And if you want to argue with me, don't argue with me. Argue with the CEO of NVIDIA. Okay? Yes, I've been more consistent on AI than Kathy Woods being wrong. Yes. Yeah, Richard, be careful with chip stocks today, my friend, and be careful with Micron. It's a stock you want to trade. You're welcome, Carlos. You're welcome. Yeah, if you guys trade MSTR, MSTY is a cheaper alternative of it. So this should be a wake up call for you right here. This should be a wake up call for all of you AI fans. 15 to 30 years, exactly as I expected. 15 to 30 years. So don't get so no, you're not Jetsons are not here. No, you can't buy a household robot. And if you think Chat GDP and all those things are I got a Brooklyn Bridge to sell you. All right, let's talk about volatility. What did Uncle Roger tell you about volatility yesterday? Let's re re What did I tell you about volatility yesterday? We're either going to go to the 15 level or we're going to go higher and break through. What happened yesterday? Way too soon. Way too soon. Way too soon. We're not even in the ballpark yet. Well, here's volatility. We're above the fear level. We're now at a fear level. The next level is 20. Now markets are at a what's going on? We're not looking so pretty right now. This is not a great level to be. Yes, we're going to be watching this very, very closely today to see if it can break below 1833. And if the my dogs are going crazy again. And if the bond market continues breaking down, if you see the bond market breaking higher, by the way, speaking of the bond market is all the way back down near the lows right here. Went up, and now it's right up here. So, not really doing all that much for us. You're going to be watching the bond market and you're going to be watching volatility very, very closely. You're going to be watching the 18. I hope to God you guys don't hear what I'm hearing right now. That's right, Michael. That's exactly right. That's exactly right. Give me a second so I could hear myself think. Jeez Louise. Okay. So the next level you guys want to watch really closely is going to be 20. Please don't make big decisions today early on in the day because we're going to have FOMC at 2 p.m. today. Oh, I'm so glad you can't hear them because they're extremely loud and there's four of them. And they start doing the ooh together, the whole dog thing. It's quite a lot. No background noise. That's amazing. I'm loving this microphone. So you're going to be watching this level today, 1833. I mean, it doesn't have to be 1833, but the low 18 area. I mean, it could be 18, but right around here, right around this pivot. You're going to be watching the 1830 level, and you're going to be watching the 20 level. Now, first time I can hear your dogs. Okay, Omar. Oh, you actually heard them. All right. Anyhow, so we're going to be watching 20 and we're going to be watching 16. I'm hoping that today will come back down here, although I'm not cautiously optimistic. I'm not cautiously optimistic at all. Now, remember, today's Wednesday. Wednesday is a good trend day, typically. Tuesday through Thursday is when we have good trend days. Mondays and Fridays are wacky. Fridays are better than Mondays, but Tuesday through Thursday is when the market makes its move. Now we reached this high here and almost this high, but now there's a meet here. So let's wait till after the open. Please don't do anything early on today. We have FOMC, and FOMC is interest rate sensitivity. So be very, 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 very carefully. And please give me this is the first time I'm asking today. Please give me a thumbs up. Unless you're Carla. Carla, you don't have to give me a thumbs up. But if you're not Carla, please give me a thumbs up. And because it helps drive organic traffic and more people will be able to listen to us and we'll have more people here, which I think would be great. So please do that if you don't mind. Bitcoin. Let's look at Bitcoin. Bitcoin is sitting right at the quadruple witching VWAP and closed on Thursday. Thank you, right, Art. And tomorrow market's closed, so we're not going to get that tomorrow. And this is the election VWAP right here. This is the election VWAP right here. Actually, let's see. Why did it? You know what? This is strange. This is strange. Why is it tagging the 8th? Wasn't the election the 6th? This is strange. Hold on a second. Hold on a second. This is weird. Yeah, 11/6. What the hell? Huh. This is weird. I put the VWAP on 11/6, but it's touching it right there. I'll have to look into this later, but it should be right here. It should, but price levels were not very different here, and I will look at that. That's very strange. Very, very strange. Why would it do that? Anyway, but we're right now holding the election VWAP on Bitcoin. What I don't like is the fact that when we tried to rally, this bar right here could not overcome this area. This is the area you want to focus on right now. Until we break this level right here, the 83 level on Bitcoin, I really wouldn't put too much emphasis. I really wouldn't put too much emphasis on Bitcoin because all of this can be chop. And the reason why this is important, this pivot is important, and I'll show you why. And I explained this to you a few days ago, and I'm hoping you guys listen to me because there's a lesson here. See this trend line? Remember I drew this trend line when we were down here, and I told you when we were right here, and I told you that we can come all the way up here and back away, and this would be a downtrend. Well, look at what happened. We literally, down to a tick, came to that level, and we broke down, and now we're right here. So we're now below all the moving averages on the SPY. We're below all the election VWAPs. You'll see it right here. This is the election VWAP. Let me see if it's tagged to the right date. Interesting. Here it's tagged to the right date. Why isn't it tagged to the right date on the bond market? That's strange. That's very strange. Anyways, very strange. That's weird. So we're now below the election VWAP, below the quadruple witching VWAP, and below the 50-day moving average, and below the we're basically below all the moving averages. The 8-day, we have a huge resistance. We have a huge resistance area above us. You could see this right here. This is the daily chart. So I would be very, very cautious. Look, guys, election, 8-day EMA, quadruple witching, 50-day moving average, in November 11th, right there, right there. Year to date, quadruple witching, election, 50-day moving average, and the 8-day EMA directly above us right here, directly above us, directly above us. Is the election VWAP just hiding behind those three? No, election VWAP is right here. Look. See how here it's on? Look, let me show you this. This is weird. I have it tagged to November 6th, but when I go to the bond market, and it's preset, it's already on my chart, but on the bond market, look. Oh, okay, now it goes to the regular level. I don't know what's up with that. Maybe it was just a fluke, whatever. But now it's on the set. But yeah, it's on 11/6. You should have it on 11/6. So if you go to the SPY, and again, I'm spending a lot of time on this, but this is really important. We're below all these VWAPs. It's really important. So here's the lesson for you. When we were right here, I told you that we have to get above this level, this trend line, okay? If we don't, we're going to make a downtrend. Well, same thing with SMH, same thing with QQQ. We are in this position with all of these indices. This is why I'm drawing these trend lines, because if we can't break this trend line, see this right here? Let me just raise it a little bit, a hair right here. It doesn't give me that fine tunability here that I wanted. There we go. There we go. Or maybe a little lower. But the point is, we haven't broken this trend line. And until we break this trend line, nothing good's going to happen. Now, QQQ, we're right at the 50-day moving average held, but we're below 3 VWAPs and the 8-day EMA. It is now it's on November 6th. Now it's on November 6th. Yeah, a lot of resistance. Yes, a lot of resistance. Exactly right. A lot of resistance. Okay. Now let's look at like equal weighted SPY. Is this helpful to you guys? Are you guys getting a good sense of what to expect in the morning, where we are, what's happening with global markets, how the bond market is waiting on sentiment, how the ecosystem of the stock market reacts to your positions every day? That's what I'm trying to get you guys to understand, the dynamics of the market. The dynamics of the market. So look at RSP. This is the equal weighted SPY. Look at it on a 1 month basis. Look at this price pattern. You've got the election VWAP. I mean, the year to date VWAP right here. We're below it. We're below the quadruple expiration, the quadruple witching. We're below the 8-day EMA, which is right at the VWAPs, by the way. We're below the 100-day. We're below the 50-day, and we're below the election day. Cool. Very, very cool. Glad to hear that. Glad to hear that. I almost forgot. Customer Service Live. Let me give you the link for that. Don't forget, guys. Cam, what are you guys going to be teaching today? Gustavo, what do you guys have in store today? Also, don't forget, VIP room where I'll be continuing my lessons. I have a lot of lessons for you guys. Here's that. And if you guys want to see the replay from yesterday, highly, highly recommend it. Here it is for you. Here it is for you. There you guys go. Thank you, guys. I appreciate all the kind words. So you could see RSP, equal weighted SPY, the 493 stocks in the S&P that are not related to the mega caps. What are they doing? And by the way, when the S&P tried to rally, what was this doing? Nothing. So don't put too much emphasis in SPY. If you don't see any movement in RSP. And I right now have RSP right next to my SPY chart, right next to my mega caps. And look, this is today. This is the RSP today. This is right now. I'm just going to zoom in here. We're below all the key averages. We're right here. This is not pretty. We're between the 100 and the 200. Until this is above the 50-day moving average, institutions are not going to be buying these stocks, which means, what are they going to be buying, Roger? Let's look at mega caps. Look at mega caps. Cam says, I'm keeping an eye scanning for volume as it returns to market. Also important update on Newton scanner. Cool. So, Magnificent Seven. We're right at the election VWAP, which is marked at the right place everywhere except that one chart. And you could see we're right at that level. And you could see we have the 8-day and 2 VWAPs directly above us. And this doesn't look pretty, and this is not a lot of growth. Now, I mentioned something to you guys about 2 weeks ago. I said, if the only thing that's holding the market up is the mega caps, and if the mega caps can't rally, there's really nothing to make us rally, right? Look at RSP. It's between the 100 and the 200. Look, you can see it right here. This is definitely not it. QQQ, let's look at QQQ. This is definitely not it. I mean, it's at the 50-day. The 50-day held, which is great, but you got 4 VWAPs above it, and you got AMD downgraded this morning. And semiconductors right now, which drove it up the day before yesterday, are right here right now, and the VWAP is right above it. Are the Mag 7 not included in the RSP? No, they're not included. No, let me explain. They're included. It's equal weight. It's all 500 stocks equal weight. But what I'm saying is, when you take those 7 stocks and you make them equal weight, they basically they become invisible. Those 7 stocks account for 60% of the index when you put the market cap into account. When you take the market cap out, it's like 3% of the index. So they're in it, Michael, but they have no impact on it. Does that make sense? So you're right. It's not 493 stocks. It's actually 500 stocks. But those 7 stocks have a weight of maybe 1% instead of 60%. Does that make sense? So I don't really count them, if that makes sense. It's a good point. It's a good point. It's a good point. That's a fair point. Fair point. Very fair point. Fair point. Good point. I don't know yet. I don't know what I suggest. I haven't looked at AMD. JC Realty Group, Jay and Cindy, you're asking me if I want to buy a house before I ever went. You're asking me if I want to put an offer on a house before I've even had the inspector look at it yet. Would you ever do that? No. No, no, you got it right, Michael. You're 100% right. You picked on a very good point. It's true. But what I mean is 493 stocks illustrated versus the mags. But yeah, they're all in there. This is very powerful. This candle is very powerful because it engulfed completely the up and the down and closed near the bottom. Very I'm trying to give you an analogy that you guys would understand. I read the Realty Group there, so I wanted to give you something in a way you would understand it. So I don't like what I'm seeing. I don't like what I'm seeing at all in any of these indexes, in any of these sectors. I'm not seeing any major reason for the market to go up, and most importantly, the bond market. It would be nice to get a key low and then a rally. What I would ideally like to see today, and I don't know what if I would, is you see this engulfing candle like we had yesterday on semiconductors. I would like to see that coming from the bottom and engulf the bond market all the way up. That would be a really good step telling us that we have bottomed out. Like a real bar that closes like right here at the high of the day. That would be a big FU, excuse my French, a big FU to the bond market, and that would say we've had enough. So far, I'm not seeing that yet, and I doubt we would see that before FOMC. And quite honestly, I doubt we would see that before Friday's employment report. Okay, they're positioned okay. I would be careful with all that stuff. It's down, and yeah, and QQQE just really quickly, and I'll move on to sentiment. But QQQE pinched between the 50 and the 100. This is not great. We need to see a breakup above the 200-day moving average and above. Everybody who bought QQQ right now, QQQE, after the election right here, we need to come back here above this level. Otherwise, every one of those people is going to be losing money until we come back above the 50-day moving average. Travis has a question mark. Sorry, and the bond market is still pushing the market overall. Yes, yes. Travis, the bond market, you might have missed the beginning. The bond market now has a correlation of 0.73 to the stock market. Typical correlation is about 0.60. Now, 0.55, 0.60, 0.73 is strong correlation, very strong correlation, which is very, very bad. Yeah, volume on RSP. Volume is starting to pick up across the board. Yeah, volume is starting to pick up, but it's nothing crazy. And this is bad. There's nothing good about anything that I'm seeing right now. All right, what about sectors? Well, we don't have any momentum to the upside. We have 26 stocks breaking out to the upside. Not good. Downside, there's some beauties out there. We're over 100. If you include ETFs, we're now at 210, which is a respectable number. I had no problem finding stocks to the short side today. Let's put it that way. But I had a lot of problems procuring stocks to the upside today. Yeah, I looked at it, Tony. I mean, nothing special. Nothing special about volume. And let's quickly look at IWM. It's the only sector I haven't looked at. And I don't want to give you guys like real specific levels today because I'm just not liking what I'm seeing across the board. This is not good. This is not good right here. Now, momentum levels. Folks, number of stocks priced over $2, 36% are trading above the $2. $2 stocks, only 36% are trading above the 50-day moving average, and only 51.6 are trading above the 200-day moving average. Remember last week we were flirting with a bear market. We were at 51.29. We're now at 51.61. Is there a difference? No, there isn't. Basically, we're 1.5 points away from a bear market. If this goes to 49%, we're in a bear market. I don't think I missed FXI, but if I did, I think I mentioned they're now below the 100-day moving average. If I did miss it, I apologize, Dave. They're doing exactly what we thought they were going to do back here. They're now below the 100-day moving average. Remember I drew this descending triangle? I showed you how it would look on a weekly. Well, we're breaking down from this descending triangle. China looks a lot, the technicals look a lot easier to read on a weekly chart. Remember I drew this triangle for you guys about a week ago, and I told you it looks like we're breaking down. We're breaking down. And please don't say I didn't draw this for you, because I did. And I also told you that for us to go up, we have to break above this level right here, 33.69. It's much easier to see China on a weekly basis than on a daily basis. So this is a weekly triangle. Not good. Not good. I'd love to tell you. I'd love to tell you something. Well, one thing I will tell you good. The bond market is coming up nicely. This is what we dropped yesterday. This is overnight, and we're coming up aggressively. We need to come above 85.90. This will be yesterday's close right here. We need to go above 85.91. But so far, we're looking really good. I mean, in terms of comparatively, how we looked this morning. No problem. I did cover it. Okay. All right. All right. Ooh, we got 565 people in here. Let's see how many thumbs up we have. We got 239 thumbs up. Thank you. Thank you. Thank you. Thank you. Very nice of you. Very, very kind of you. And Rich, please ask me about Kathy Woods in the VIP room today. I'll spend 5 minutes showing you. I'll show you the data, and I'll show you how I figured it out. And it's actually a pretty cool way of figuring it out. And it's a good way for you to see if your fund manager is full of shit or is on the up and up. Okay. So I don't like the momentum levels. I don't like what I'm seeing here at all. I don't like this at all. Yeah, no problem. Good, good, good. And again, look at S&P 500. 52% of stocks are trading above the 200-day moving average. Folks, if this goes to 49%, we're in a bear market. Officially, like official bear market. How about Russells? Look at all the Russells, guys. This is the 1,000 of the biggest stocks. This is 2,000 of the smallest stocks, and this is them together. Look at these numbers. It's not concentrated in the SPY. It's broad-based. See, if the overall market looked good and just the FANG stocks were taking a crap, I wouldn't be this upset. But it's everything. Look at Russell 3000, 52%. Bonds went down yesterday, but so did SPY. Yeah, they did. It's 70.72%. For 72% of the time that bonds will do something, the stock market will react the same way. 73, not 72, 73% of the time. It was 72, now it's 73% correlation. And look at NASDAQ 100, 53, 56. These are bad numbers. Dow's looking okay, but it's only 30 stocks. So I'm not liking I don't like what I'm seeing right now. All right. All right. So let me give you stocks to the downside and to the upside. And a lot of these stocks are going to be stocks that you've never heard me talk about before. You're all in for a huge surprise. And yes, I'm being highly sarcastic right now. The more we see the same stocks, that means the more we're right. Because if we keep showing the same stocks moving in the same direction, look at Lennar Homes. Compression, breakdown. That's a very high probability trade right here. I'm surprised that I didn't see this yesterday. I should have sold it. That's a very high probability, low risk trade right here. Right here. That's a very, very high probability, low risk trade right there. I missed it. Anyways, we're down already this morning. Anyways, if we come up to the VWAP, maybe I'll buy it. Anyways, Lennar low, home builders. Now, this isn't ready yet, but if Lowe's breaks the 200-day moving average, it will be ready. Good idea to set stops. MGM, casino stocks with China broke compression. We broke down from a compression on volume. CCI. And thank you guys for supporting me, sending me such nice emails, and just being such nice people to deal with. Most of you guys are just absolutely fantastic. Crown, CCI, not the first time we're giving you this stock. Would have been a beautiful play right here, right there. Actually, it's still pretty good, but like right there would have been perfect. Right there. See that? Nice little breakdown right there. Again, Still not too late. AVY. Sony's asking me about Adobe. I'll talk about Adobe in a second. This stock has to break below 185 AVY. Ball. Beautiful, beautiful, beautiful. I had no shortage of finding stocks to the short side today. I'm going to tell you that right now. It was like this. A little choppy. Now, this looks good. If it breaks 200, it's got till about 191 area. But it's got to break this level first with gusto. CMCSA. Nice, nice, Naples fan. Nice. This is a beauty right here. That's a breakdown right there. That's a breakdown right there. A lot of stocks are breaking down from compressions to the short side. That's a very low risk, high probability opportunity for you. Now, this stock is all over the place, but look at this breakdown. Are you guys starting to get a feel for the kind of stocks that make me excited? Brian says, if the indexes are moving down and some of these stocks are breaking down, is the stock doing the heavy lifting? No, 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 no. Everything is doing, that's the point right now, Brian, that everything is, it's not doing great. It's got to be very selective with the stocks right now. Look at that nice compression breakdown. No, you're getting it from everywhere, Brian, right now. You got to be really careful to the downside because you're seeing that follow through right now. AMT, nice breakdown. You see how many compression breakdowns there are? Yep, sinking with the ship. Yep. Now, somebody asked me about Adobe. Let's look at Adobe. So let's talk about Adobe. Yesterday in the pit, short Adobe or buy a put at 120. Take profit on Adobe. Exit 424. Look where Adobe is right now. Swing traders welcome to stay in longer. 423.50, 422.90. Swing traders, get out of Adobe. If you're in the pit, get out of Adobe this morning and send me a thank you email. We have a deal? Capiche? How many of you took that Adobe yesterday? You rascals to the short side. Paul, we got out of Pepsi with a profit of like 20% yesterday. What are you talking about? Weekly cash flow, Paul. We took profit on Pepsi. You folks that can't touch the thumbs up, just keep coming. You will see the value soon. Thank you, Dave. Thank you. So, yeah, 417 now. Rich did. Cha-ching. Yeah, look. See, I love the timestamps. Look at this. Short Adobe, filled at 424.60, take profit, 420. It's a day trade. And then swing traders, welcome to staying longer. 417, 418. Yes, you all made money. Don't lie and say that you didn't because you all did. Yeah. How do you like them? How do you like the pit, huh? It's great, huh? All right, let's continue. Upside now, upside. Now, who's the one that was talking about somebody made a good point here. It was somebody said it was Brian. Now let's change your question. If all indexes are moving down and some of these stocks are breaking down, is the stock doing the heavy lifting? Now to the upside, all of these stocks definitely did the heavy lifting yesterday. Oh, I'm late to work again. God darn it. Now, these stocks were doing the heavy lifting. Is Decker ready for a buy right now? No, it has to break above this compression. But I do like it. But it's not ready yet. GME. Look at GME. It's on my radar all of a sudden. Yes, GME. Who would have thought? Citibank. Earnings on financial stocks are coming out. Now, I could tell you that this stock was being bought yesterday by institutions. 100%. because the market was down yesterday. It's a major S&P 500 stock. How could it have been up yesterday without institutions piling into it? You're welcome, Martin. Hard not to profit, right? It is hard not to profit. All right. WRBA, I liked. AR, I still like AR. And when I say AR, I'm talking about all the natural gas stocks. There's like four of them. So don't double dip. Okay. Don't double dip. DXE. This is I think this is a utility stock or natural gas. I'm not sure, but I like this trend. A little deviated from the 8-day EMA. BSX. Look at how smooth this trend is. A little overextended, but look, right here would have been the perfect time to buy this stock right there. But again, still looks great. But I love this trend. YPF. Second here. All right. All right. C&G and me were second and third in the gainers yesterday. Oh, good to know. I did not know that, but that's good to know. Somebody asked me to look at Tesla, and I got to get to work, folks. Not that I haven't been working for the last hour and a half, but I got to get to work. Tesla, my suggestion for Tesla would be to see what happens. I wouldn't be doing anything with Tesla right now. We broke this triangle, which is bad, but now we have to break the election level, which is at 375.57 and the 50-day moving average. This is pretty good support, so we may just kind of bounce around here. I would be very, very cautious. Overall, what did we learn today? The market is not, the bulls are not excited right now. They're not in a hurry right now. The second half of the days, we've been seeing selling pressure mostly. The bond market is still down quite a bit. Be very, very selective and be very, very careful today. Be very, very selective and be very careful. And again, Customer Service Live, let me give you a link for that. I don't know where the time just got away from me today. I guess I'm having too much fun with you guys. Here is the link for the 1 o'clock class. I think they're having a replay. And there we go. Bob says, Penny, you have to log in to get the thumbs up. Oh, okay. All right, guys. Thank you so much for the thumbs up. Thank you for supporting me. Thank you for being here. I love you all, and I will see you at noon today. Please, please, please be careful and err on the side of caution. And you may want to take profit on Adobe at the open and send me a thank you letter. Bye.